All right, let's get straight to it. Forget the KOSDAQ, forget everything else. The only signal that matters tonight is this, a 1.06 trillion won liquidation by foreign money right out of Korean hardware. So what does that tell us? It means the structural derating for US semiconductors, well, it's not just coming, it's active, it's live. This is the only vector we follow. So the Korean market, it's completely fractured. And that 1.72% drop you're seeing on the KOSPI, that isn't just another red number on the screen. No. That's a flare going up, signaling that the appetite for risk, it's just gone, evaporated. And look, you have to understand, the index itself, it's just noise. The real signal, the one we care about, is the flow of capital. And what we're seeing is that the smart money, they aren't just trimming their positions. They are liquidating. They're pulling the plug on the very heart of the global tech supply chain. That is the vector we're tracking. Okay, let's start the investigation. We need to decode this capital flight. Make no mistake, what's happening in Seoul is not some isolated event. This massive liquidation you're seeing in the electrical and electronics sector, think of it as a high-fidelity early warning system, a leading indicator for the SOXX ETF. And just look at the precision of this move. We're talking about foreign institutions focusing over 1 trillion won of selling pressure on one single sector. You gotta ask yourself, is this just profit-taking? No way. This is targeted. This is a deliberate capital flight. So what's the mechanism behind all this? It's something I call the capital intensity trap. Think about it. Brent crude is sitting over $100. The US 10-year is at 4.265%. When you put those two things together, the entire cost structure for hardware manufacturing, it just breaks. It's really that simple. And the data absolutely confirms this trap. We're seeing a critical negative correlation where rho is approximately negative 0.85 between those rising yields and the foreign cash pouring out of the KOSPI. This isn't a guess. This is a mechanical, statistically significant sell signal. Let me break it down for you visually. You've got these two forces, rising energy costs and rising capital costs. Together, they create this totally asymmetric burden. It absolutely crushes the manufacturers, the ones with huge physical infrastructure costs, the foundries, the assembly lines. Meanwhile, the asset-light design firms, they're basically insulated from it. So you see, this goes way beyond just market sentiment. What we're witnessing is a structural repricing of manufacturing risk itself, and the data backs it up. We're seeing concentrated short interest building not just against the index, but directly against its most strategic tech partners. The bet here is against the physical supply chain, plain and simple. And this creates the critical tension right before the US Open. On one hand, the hardware supply chain is screaming bear. But on the other, the KOSDAQ's isolated IT strength is signaling bull. And it's right there, in that conflict, in that logic gap, that's where we find our edge. So, you know what? Let them trade the headlines. Let them chase the noise. We trade the supply chain. All right, now let's get to the plan. Okay, it's time for the battle plan. We're talking actionable price levels for the NASDAQ 100 futures. So listen up. This is important. Okay, step 1 is our entry. We're looking at a move below 24,583. That's our confirmation that the Asia liquidation vector is officially active in the US session. Step 2, the exit. If we break below 24,448, we execute a tactical retreat from all growth sector exposure. Got it? Now, the invalidation zone is that chop range between those two numbers. If we're stuck there, we stand down. Remember, cash is a position. All right, here are your confirmation signals. You need to monitor these closely. At the open, watch the NASDAQ futures. Keep your eyes glued to that 24,583 invalidation level. You're looking for the SOXX to gap down more than 1.5%, and you need to confirm that the US 10-year yield stays up there. If that yield drops below 4.25%, the entire plan is invalid. Off the table. And now for the final checklist. Think of this as the last filter before we execute. This is how we confirm the structural condition is in place. Here it is. Watch the pre-market volume on Micron, ticker MU. If you see heavy selling volume, that aligns with our thesis and confirms the signal. But if you see light volume or even buying, anything that contradicts the narrative, the plan is invalidated. We walk away. We log the result at 6:30 a.m. Eastern. No exceptions. You want the edge, you want the analysis from the Asia close before New York opens, you know exactly what to do. Be here.